Markets failed to hold on to the opening gains as realty and IT stocks exert pressure. Mid-cap significantly outperform healthcare and metals gain.
Reliance Industries has been granted approval to set up advanced chemistry battery cell facility under the PLI scheme, with scheme benefits of 3,600 crore rupees. Other bidders under the scheme have been waitlisted.
A day after SEBI responded to claims of a toxic work environment, the regulators saying employees seeking pay hikes had been misguided by external elements. A group of employees are staging a protest on the regulator's premises, refuting these claims.
RBI Governor Shaktikanta Das has stated that it is a headline inflation which includes 46% food weight. That matters, as it is what people understand. He adds that the RBI must successfully navigate the last mile of disinflation to preserve credibility of inflation targeting framework.
Hello and welcome to Halftime Report on CNBC-TV18. I'm Ekta Batra and with me is Nigel D'Souza. Well, it is a day where the markets are just about consolidating at this point in time, at least the frontline indices. We have the mid-caps which are outperforming, but the internals look good. So we have the advanced decline ratio, which is positive at this point in time, more stocks advancing than declining. 281 stocks at 52-week highs, around only 20 stocks which are at 52-week lows. Separately, 258 stocks which are in upper circuit at this point in time. So a lot going on in terms of the internals, which look like quite steady at this point. Hi, Nigel.
Hi, Ekta. Well, you have Dilip Bilkon, I think. That stock should be on your radar. There was an order win that was flashed for you on the screen. It was more than 1,000 crores, if I saw that correctly. The stock has moved to the high point of the day, so DBL should come up for you. And you had Premier Energies, the stock that listed just a couple of sessions ago. It listed at around 900 rupees, went down to around 800 rupees. But from there, it's seen a big bounce. So massive volumes on that counter. Premier Energy should come up for you on the screen. And JM Financial is another name that's done pretty well in today's trading session, Ekta.
Yes, absolutely. Well, it's turning out to be quite a positive session for the mid-caps. But nonetheless, let's talk about the first company on our radar. Ola recently announced the company's foray into the electric motorcycle segment with the launch of the Roadster series of motorcycles. But do note the company's August 2024 retail sales slipped around 34% sequentially. Its market share has also fallen to the lowest level that we've seen since September of 2023. To discuss this, we have with us the man of the moment, really, in the past couple of weeks, Bhavish Aggarwal, who's the chairman and the MD of Ola Electric Mobility. And we have Prashant in the studio to take us through this conversation
Absolutely.
as well.
And Ekta, thanks very much for that. Bhavish, hi, good afternoon. Thanks very much for joining us. And I think we are speaking for the first time after your listing, so congratulations. We spoke, I think, 2 days before you made it to the public markets, we discussed the road ahead, etc. I think you would agree, or maybe you will not, because you were expecting a good listing. The price performance was astounding. Of course, it's come off. I mean, it's the nature of public markets. A little bit of up and then maybe a little bit of sideways price action. So we are somewhere there. So, but stock price aside, Bhavish, if we can start by talking about what's happening here and now, right? And I want to start with the sales numbers for the month of August, which look a little subdued because I have the the numbers that you that we have with us. So your sales for the month of August are down some 34%, Bhavish. It's a steep fall month on month. Year on year, it's a 45% increase, but month on month, it's a 34% decline. I'm looking at the overall industries as well. That has fallen 18% month on month. But your sales have gone down 34%. Could you tell us what has happened in August?
Prashant, firstly, wonderful to be here after our IPO. First time in this context. Excited to be on your show. And like you said, stock price has done well. And, you remember when we were speaking, I had said that in my assessment, we've left some money on the table for investors. And I'm really glad that people have liked the fact that, they bought in and then they have made money with us. And like I said, even then, this is just the beginning of India's EV story. And Ola Electric is obviously the leader in that story. Now, coming to numbers, Prashant. So August in general is a bit of a seasonal down month in the industry. And you see that across EVs, across ICE vehicles and two-wheelers. It's a bit of a dip month after June, July. And every OEM industry has also dipped a little in August, as is expected. Other OEMs have also dipped. We've also dipped a little, but year on year, actually, we have one of the highest growths in August. And the fundamentals of our growth story remain the same. We are focused on profitable growth. We are focused on, there are 2 or 3 strategies that I want to share with your viewers that we are absolutely sharply focused on.
Bhavish, we'll touch upon all of this.
Yeah.
But let me just focus on the market share, share and the numbers in August. You said August is seasonal, fair enough. But your market share now has come off, right? Actually, I said this when we spoke. I mean, you're the big leader. It's yours to lose in that sense or to build on. But you're the most, so you got the most to lose in that sense. But you're off from 50-odd% to 31. I think, is it 31% now? As at the end of August, right?
Yeah.
I'm looking at the others, right? Bajaj, for example, I mean, share has gone up to 18%. Last year it was 11%. TVS has come back to 19%, where it was in FY24, but it's come up from 15%. So these are sharp shifts which are happening within the industry. So I just wanted to get a sense from you and for your investors and viewers as well. Where should we see this number? At 31% now, where should we see this number?
See, we are focused on building the next wave of the EV journey. The others, the incumbents, like you said, Bajaj, TVS, everybody, they are finally getting into the game. And it's good to see that unko thodi, कहते हैं ना हिंदी में देर आए दुरुस्त आए. So if you remember, all these people before our IPO were saying, "Arey, electric, we will see where it goes, and this is not a real business, etc." Even now, they are only half-heartedly doing it. We saw reports about how all of these people lose so much money in their electric business. Whereas we, as you saw in our quarterly results, we actually are EBITDA break-even, pretty much there in our EV business. So our focus is on profitable growth. You will see us continue to bring new products, expand distribution, and continue to focus on vertical integration to bring better technology and control cost. Now, over the last 4 years that this company has been in existence, we've actually invested close to $1 billion in our technology and manufacturing, which is focused on EVs. That is not what our incumbent competition has done. तो अभी वो फाइनली मैदान में आए हैं. फाइनली उनको थोड़ा सा चेस्ट थम्पिंग चाहिए तो थोड़ा डिस्काउंट पे अपने प्रोडक्ट्स बेच रहे हैं. But if you see, they will actually be burning a big hole in their balance sheet by building their EV business. And the challenge for incumbents, Prashant, at a macro level is वो खेलेंगे तो पछताएंगे, नहीं खेलेंगे तो पछताएंगे. खेलेंगे तो पैसा लूज करेंगे और अपने खुद का आइस बिजनेस कैनिबलाइज करेंगे. You can see all of these companies, the incumbents who have started playing in electric are losing ICE market share to their ICE competitors. And nahi khelenge to anyways they will lose out on the future, which is electric. So so the game has just begun.
Yeah. No, and you put it well. I'm sure they're also listening. But you would also agree, right? I mean, these are large, well-funded, very profitable companies. So in that sense, I mean,
thanks to our IPO, Prashant, we have a very strong.
You are as well.
And not just that, we have a very strong balance sheet, which is focused only on EVs. I saw some commentary by some of our peer companies that their clean energy business is 20% or whatever. There is only one true clean energy, which is EVs. There is nothing which is else which is clean energy.
Right. So I have 2 questions. You said, well, we're also well funded. So are we looking at a bit of a discount-led sort of price wars, basically, in the space for market share? Are we headed towards that? Are we already there? That is one. And second, EV adoption also, because a government subsidy was a pretty critical help for the industry, which got penetration up from 0.5%, less than 1% to where it was. But last 2 years it stagnated, and now this extension also is expiring. So how crucial is that to see? I mean, the next leg of fame. So a two-part question: one, price wars, and the second is, of course, government support. Go on.
Prashant, on the government support, I'll start with that first. Globally, we've seen governments normally support the EV transition for a few years. It's about 4, 5, 6 years, depending on which industry or which country. And that's where the Indian government has also guided. The FAME subsidy has anyways come down in the last 2 years from 60,000 rupees per product to 10,000 rupees per product. The government has recently publicly said that there's a new FAME coming, which will continue support, maybe with a slightly more different criteria on localization, which, by the way, we meet very, very nicely. So, in our view, the government support is at the right levels, and it will taper off over the next 2-3 years. The beauty is the industry has actually expanded significantly despite this FAME subsidy reducing from 60,000 to 10,000, right? Just 3 years ago, the industry was less than 1% electric. Last month, the industry was 7.5% electric. And this is only when only scooters are there in the market. Our motorbikes are still to come, and the motorbike electrification is still to begin. So the electric penetration is continuing to grow. If you look at within the categories of action like scooters, etc., penetration is close to 20%. So I actually feel there will be a continuing inflection on EV penetration as more and more consumers become comfortable with the electric and as product options expand. So that's one. On the price that you mentioned, see, our focus has always been on investing into technology and vertically integrated manufacturing to reduce our cost structure. And that is why even already we are at a EBITDA very close to EBITDA break even, whereas others, including these traditional old hands, so to say, burn a lot of money in their EV business.
All right. Bhavish, that point is taken because like Prashant mentioned, these are companies which have well-established, well-run businesses for multiple years. But I just wanted to narrow down on one specific thing, which is basically a motorcycle launch, the Roadster. 3 variations of that. The pricing is extremely competitive. You've got, this 999 rupee booking scheme also, which was launched. Give us a sense, give us numbers specifically in terms of the kind of bookings we've seen, the kind of launch numbers that we've seen for maybe one or all 3 of these variants.
So I won't share the booking numbers today. In due course, we will share the booking numbers also with you. But there is a huge amount of excitement on our motorbikes. You mentioned the Roadster. There are 3 variants of that. 3 models actually, and each model has multiple battery pack variants. All of these in the next few months will be live in the market for consumers to use and buy. Our focus is to expand the EV industry away from only scooters into motorbikes and a few other categories also. We have made some announcements in the past of a few other categories where we will get into electrification. The next phase of electrification journey is going to be led by product expansion. Our motorbikes have had a very strong reception. We've had a lot of people reserve it already. And soon you will start seeing it getting into consumers' hands.
All right. Hi, Bhavesh. Good day. And this is Nigel on this side. First of all, congratulations on a solid listing. And I'll tell you what, I'm a bike enthusiast. And if God wills, I would like to ride a motorbike to work, till the end of my career. So I could be one of those target audience, who's going to be moving from the current vehicles to the EV vehicle. So I'm looking at the products very, very closely. And since you've got into motorcycles as well, it's going to be quite interesting. Now, going by what you said, I wanted to understand 2 aspects from you. You're almost at EBITDA break-even is what you said. How much are you accounting for in terms of PLI benefits as a percentage of your selling price? That's point number 1. And there's going to be a toss-up now between market share or margins. I don't know how you're going to manage that. There's a seasonal factor. That's why your market share has come down. But where do you see it stabilizing at? So PLI and market share. Please go ahead.
On market share, Nigel, we are very focused on penetration increase by expanding 2 things, by expanding our product portfolio and by expanding distribution. And we recently made announcements about how we will be expanding distribution to beyond our company-owned stores also through the ONDC platform. And in the near future, you'll see us have a few hundred non-company-owned stores as agents or whatever you call them across the country, which will take our penetration through distribution even deeper. And then product expansion through motorbikes, through other form factors. All of this is on the near-term radar. So market share is a function of all of these things. So today our market share is, let's say in August, 32%.
Yes.
From here it will go as our distribution scales up and as our product expansion scales up. We are, like I said earlier, focused on growing our volumes, growing penetration, growing market share with balancing on profitability. So sustainable growth is our focus. On PLI, we account for mid-single digits in terms of overall revenue as PLI. And in more details, we will share in one of our quarterly financial updates to all of you. But that's roughly where we account for PLI.
Mid-single digits is what you're saying, right? So around 5% odd. And are you receiving those PLI payments? Have they started coming in?
No, the first payments will start coming in maybe this quarter or next quarter.
Okay, got it. And just to push you a little bit on that market share point that you were making, it's at around 32%, but going by everything that you said, increasing your distribution, your reach as well, it should stabilize what, in high 30s? Would you be satisfied with that?
See, an entrepreneur is never satisfied, Nigel. Mera goal to 100%.
But what's a realistic number, Bhavesh? The markets are listening to what you're saying, so they would like broad band.
Like I said, I don't want to guide the markets to a market share. We have grown from wherever 0% market share 3 years ago to mid-30s right now at a stable state. Our focus is on expansion of the core fundamentals of the business, the distribution, product, and the manufacturing.
All right, Bhavesh, and you're looking at some backward integration with regard to your sales as well. Once that comes, first, when does that come on stream, and how does it change the profitable aspect?
Our own cell is going to come online early next calendar year. And we have, 15th August, we showcased the cell. We showcased a scooter running on the 4680 cell. It showcases that we are fairly along in our journey of productionizing our cell. And early next year, it will start coming into our products.
You must have.
And by the way, Nigel, when I say 100% market share, I don't say that loosely. By profit market share, we will be 100% in the industry on EVs.
Oh, wow.
Interesting, Bhavesh. I like the aggression, actually, as you're revving up the engine. But Bhavesh, just one more point, since you're being so candid. The service aspect is, the feedback that you get isn't very impressive. A lot of chatter online. How are you addressing that? Because ultimately, once I get my bike, I'm happy. But a lot of these two-wheeler majors who have done well, the after-service is something that helps you out. The parts, the after-service, and that's what drives customers to come back to you. So comment on that.
Absolutely. No, Nigel, very fair point. And a vast majority of our customers never have any issues with their product. There are some, obviously, consumables like brake pad changes, etc. In the monsoons, it spikes a little. And we've had a bit of a backlog in expanding our service network. We have a 800 odd sales network, but we have about a 550 odd service network. So we are focused on expanding our service network. And we also recently announced that soon our service will also be beyond just our company-owned stores. Our focus is to certify every independent garage, every independent company in the services business, who can then also service our EVs. So our focus is to really expand touch points for consumers, for them to really get quick service and not have to pay for it. But we've been expanding our own network, and now we will be actually turbocharging it by expanding it beyond our network.
Bhavesh, you've said that on these lithium cells, right? When you buy and others buy cells, there's a 20-25% margin that they have to pay, which you won't have to, and that's a big cost advantage when your cells come on stream. We are seeing a huge amount of, yesterday, for example, you would have noted, right, that announcement for the advanced cells coming through, PLI coming through. Other big sort of battery makers have also announced plans. My point is cost. Is it going to be, by the time all this capacity comes on stream, will it be such a big determinant in terms of profit margin and profitability?
Yeah, Prashant, firstly, all these announcements in the lithium cell manufacturing space is great for the Indian ecosystem, because we need a lot of capacity in India to serve the automotive segment and to serve the energy storage segment, right? So abhi to India ne scratching the surface bhi nahi kiya. For the course of this decade, most likely we are going to be domestic supply constrained in cell capacity. So that's number one. And number two, the cell manufacturing is not only a manufacturing-led cost reduction story, it is a technology-led cost reduction story. And we have a 4 or 5 year lead over there over any of these people coming in. We've been investing in cell technology for a long time. We've been the first off the block here. Our manufacturing facilities are ready. And our cell is not the past generation of the cell. It is a 4680 new age, cutting edge generation of the cell, which further reduces cost and improves performance. So our focus
You
here is
still
going to
think-
be to lead in the technology and the manufacturing scale.
Okay. On just one last point from me, Bhavesh, on there are some reports of a three-wheeler, Ola three-wheeler. I mean, is it too early or is it in the horizon? Three-wheelers, by the way, is a highly profitable segment, much more profitable as compared to two-wheelers.
Prashant, three-wheeler mein, I can neither confirm nor deny these statements, but I can share some context with you guys. Three-wheelers mein, we as a group have had a very strong engagement because every three-wheeler driver works on my Ola Cabs platform, every one of them, right? So I know their pain points, I know their propensity for electrification, I know the GTM, go-to-market, distribution, financing, everything we have very deep, entrenched experience in as a group. And three-wheeler has always been on our radar from the beginning of Ola Electric. We've also showcased some technology focus on this. And our entire manufacturing technology strength that we've built in two-wheelers is going to be easily transferable to three-wheelers as and when we choose to bring out our products.
So and when is that? Can you tell us by when?
आप ही बोल रहे reports हैं. तो I can't.
तो आपसे कंफर्म करने के लिए पूछ रहा हूँ मैं क्या मतलब इस साल अगले 2 quarter 3 quarter is it a foreseeable future or is it long way off?
We keep working on products, and the three-wheeler has been obviously under our R&D division for a while, and
okay.
Our effort is to bring it to market soon enough. Yeah.
Okay, all right, Bhavesh, we're going to leave it on that note. Thanks very much for joining in and speaking with us on a whole host of issues. That's the CNBC-TV18 exclusive. As you can see, Ola Electric has moved up around 4.5% at current reckoning. The stock has given returns of around 50% from its issue price of around 75, 76 odd rupees, but it's still off the highs of around, I think, 150 plus rupees that we had seen earlier post-listing. We'll take a short break, but we'll get you more on the markets once we're back. Stay tuned.
Welcome back. Well, the writers are taking over as of now because the markets are moving in this very tight 25-30 point band. And because of that, the writers are making the money. So you pull up a couple of strikes. On the call side, you should pull up the 25,200 call, where the premium has come down drastically. At the start of the day, it was more than 50 rupees. It's come down to around 15 rupees. So there is aggressive writing that we're seeing at that particular strike. Even if you look at the 25,250 call, well, you see aggressive writing out there as well. And the premium out there has come down from around 40 rupees to around 8 rupees. Now, what is this telling you? The bears believe they've got this covered at around 25,250 to around 25,280 or thereabouts. That's the broad range. They believe that they could defend these higher levels. But on the downside as well, the 25,150 put, that's seeing a fair bit of addition. So on the downside, this premium has come down from around 50 rupees. So 25,100 becomes important on the downside. And on the upside, you're looking at around 25,280, which could be a bit of a resistance zone. So that's the broad range. And I'm talking about these strikes because all of them expire in the next 3 hours from now. Well, I'll tell you what, for the time being, we'll slip into a short break. You come back and we'll speak to the management of Thyrocare. The stock has been an underperformer, but in the recent past, it's bounced up big time from the lows of the day. Stay with us.
Welcome back. Well, for the mid-cap index, it's up around 0.5%. Just want to point out that a couple of these stocks, such as Premier Energies, it had, remember, a fantastic listing earlier this week, is now seeing further traction. So that stock is up around 11.5% in today's trading session. We have GM Financial, which is up around 6% at this point. It's rallied around 21% this week. So do watch out for that. A lot of traction on the volumes as well as the pricing front. Vijaya Diagnostics is also doing well. That stock has actually done very well on a year-to-date basis. It's given returns of around 41%. So all of these stocks are managing to gain a significant bit. In fact, the entire pharmaceutical healthcare space has been showing a lot of traction on a month-to-date basis. If you look at even something like a Piramal Pharma, it's up around 15% this month. Shilpa Medicare, which received an approval just some time ago, for an NCD in the US, that stock, Shilpa Medicare, is up around 10 odd percent. Alembic Pharma has also rallied around 8.5 odd percent this month. So good going coming in for a couple of these stocks, but keep your eye out on Jio Financial Services as well, because that stock has done well. It's up around half odd percent today, and it's gained around 49% this year. So a lot of traction in specific stocks today. On the downside, just watch out for maybe a stock such as Prestige Estates, because that stock is showing some amount of profit booking, is down around 3 odd percent. We have Marksons, which is down around 1.7%, and a couple of others such as Havells, which is showing some amount of traction on the downside. So that stock is down around 18 odd rupees at this point in time, and it's not done too badly this week. It's actually this year, it's up around 37% this year. But nonetheless, it is showing a bit of profit booking today. We'll take a short break, but on the other side, we'll get you Thyrocare, that promised chat, as well as other stocks in focus. Stay tuned. Welcome back. Well, Thyrocare is the next management on the show. The stock is up more than 30% in 2024 so far. The company has acquired Vimta Labs diagnostic and pathology business for around 7 odd crores, so not a big acquisition. To discuss this and more, we have Rahul Guha, who's the MD and CEO of Thyrocare, joining in now. Rahul, hi. Welcome to the show. This is Ekta. If you could just start by telling us the rationale of buying Vimta Labs diagnostic business. How many labs do they have? How many collection centers do they have? Are they profit making?
Sure. Good afternoon, Ekta, and thank you for having me on the show. Actually, Vimta Labs is the third acquisition that we've done in this year. We had acquired Think Health earlier in the year, followed by Polo Labs, and now Vimta Labs. What we're seeing is very interesting opportunities where companies have built fantastic brands in different geographies or in specific technologies. So Think Health had built a ECG at home capability. Polo Labs has been very strong in Punjab, and Vimta is very strong in largely AP Telangana. They have 11 labs across the country, but very strong in AP Telangana. And these are brands with fantastic equity in the local markets that they work in. And with the Thyrocare backbone, our operational efficiency and our particularly focus on quality and our cost structure actually creates a lot of synergies between the two brands and allows us to create win-win for almost every acquisition that we've done. This is one of the first three of many, but we anticipate to continue to create win-win opportunities through M&A, where we work with specific local market brands that have built great equity, great relationships in the markets that they're present and where Thyrocare is weak, and use that as a platform to expand deeper and deeper into India.
Got it. So it's basically focusing on local market brands as compared to a larger strategy that you're looking at. What is the blended margins of these three acquisitions? What I'm trying to get down to is that are they adding to your EPS? Are they EPS accretive as of now?
No, most of them, it will take us roughly about 2 to 3 quarters to actually make them EPS accretive. So I would anticipate, and that's why they're more small acquisitions, because we're being cautious and going step by step. But it takes us about 2 quarters to get them EPS accretive. We need the synergies to flow in, the benefits of being on the low cost, cost efficient Thyrocare backbone, without any compromise on quality. So it will take about 2 to 3 quarters before these acquisitions get EPS accretive. But that's why they're small, and that's why we're taking it step by step.
So what's the corpus that you have on hand in terms of further acquisitions? Because they are small sized. What's the cash on books currently? How much are you looking to deploy in terms of M&A? What's the pipeline like?
Our operating cash flow is actually quite healthy. We generate, about 150 to 200 crores of operating cash every year. We've kept aside for this year about 50 crores to go for acquisitions, and we anticipate to be on track for that.
Interestingly, Rahul, now I'm going to get to the business. You have 3 different segments which are contributing. Wellness has become a huge mainstay for all of the diagnostic companies now. You have Janch, you have Arogyam, which is your preventive health segment, and you have Her, which is women-centric testing. Janch is more lifestyle challenges, which you try to aim at in terms of the patient. Tell us about each one of them. How much are they growing at this point in time? How much are they contributing to business? Which one is growing at the fastest pace? And what is the contribution expected?
Got it. So Arogyam, which has been our primary flagship brand, continues to grow. It tracks the growth of the company, more or less in line with the growth of the company. And we continue to maintain our market share in the wellness segment, for which we are well known. Janch actually has been doubling every year. Even, our Janch Fever package, which helps you with the diagnosis of fever, whether you have typhoid, dengue, chikungunya, all in one single test. That actually doubled over last year, and month on month also, as we are in the fever season, has been doubling. So Janch, of course, grows much faster and is doing very well. HerCheck is a nascent brand, so it's too early to comment. It's largely focused on women, but mostly promoted through the gynecologist network. So that takes time to scale up, right? Because we're not going direct to consumer. We are going through the doctor network, explaining the value proposition of having these kinds of tests exclusively designed for women. So that will take time to scale up. But Janch is doing very well. As I said, versus last year, a doubling. And in this fever season, we've been particularly happy to see how Janch continues to be the test of choice for consumers who have fever and also many other chronic disease ailments as they think about better caring for those ailments.
Hi, Rahul. Good day and good to hear you out. A lot of ailments, a lot of testing going on. I hope most of the tests are negative because there's been a viral in the air as well. But Rahul, I just wanted 2 numbers from you with regard to your financial performance. I've been looking at it, and your revenue per quarter has improved. Now you're clocking 150 crores at least. Last year you did around 570 crores for the year. So the start has been good to the year. Will you deliver more than double-digit growth for this year? And also margins have steadily been improving from late teens to early 20s to you're moving towards late 20s now. Where should this number stabilize at? Revenues and margins?
See, I've been maintaining my guidance, and I will not change the guidance for the year, even though Q1 has been very encouraging. As you know, Q3 tends to be a difficult quarter for the entire diagnostics industry as we get into the festive season. Funnily enough, festivities are not good for diagnostics. And as you said, the viral in the air is actually very good for diagnostics. So while we've had a strong start to the year, I'm still being cautious about the second half of the year. So I'll maintain my guidance at mid-teens top line growth. And if we are able to see margins remain stable or marginally improve, I think that would be a good performance for the year.
Okay, so mid-teen top-line growth is what you're anticipating.
Yes.
Rahul, I wanted to ask you about the competition dynamics also, because most of the diagnostic companies have said that it's largely settled at this point. You've been known to, offer one of the most competitive rates in the market at this point. What is your experience when it comes to competition in metros such as Mumbai?
Definitely. If you look at the competitive scenario over the last 2 years, and as I've been saying on your show as well, Thyrocare is almost 80% tier 2 and beyond, right? we didn't face a lot of competition in those markets, because if you look at the new entrants, and particularly the new age tech entrants that came into the diagnostic space, they were largely metro focused, right? So I almost think of it like a storm in the teacup, right? India is very large, and with 80% of our revenue in tier 2 and beyond, not in metro, tier 1, is only 20% of our business. We didn't really face the storm that we saw. But definitely, I'm seeing growth coming back in the metro regions. We are seeing competition easing off. Many of the brands that entered are actually, at this point in time, looking at different exit opportunities. So I definitely see the competition in the metros easing off, but the opportunity, Ekta, is in tier 2 and beyond. That's where the vast majority of India lives, has never seen a diagnostic test, or doesn't even know if they have diabetes and things like that. And I definitely think the opportunity sits there.
Okay. All right, Rahul, we're going to let you go on that note. Thanks very much for joining in and speaking with us and giving us your perspective on the business. And I'm sure we'll touch base again soon enough to get a sense in terms of what, where the business lies in terms of guidance as well. Thanks very much for talking to us. We'll take a short break, but on the other side, Manisha Gupta will join in. She has with her PN Gadgil Jewelers. Stay tuned.
Welcome back, and time for an exclusive conversation. Now we are joined by Saurabh Gadgil. He is MD, PN Gadgil Jewelers. Mr. Gadgil, hi. First of all, congratulations on the IPO. You are the second largest organized jewelry player in Maharashtra in terms of number of stores. What prompted you right now to hit the IPOs?
It's a great day. It's a great journey for the brand PNG, and today we are finally IPO ready, hitting the market soon. Like you mentioned, yeah, we are the second largest player today in Maharashtra in terms of number of stores. We're at 39 stores. Titan is roughly around 55 plus stores. And what we really felt was that the entire journey of PNG has been in the state of Maharashtra. We have been here for almost 20 decades now, having a long relationship with customers spread over generations together, karigars who are with us for generations together. And we felt now is the time when a company is poised for the next phase of growth. And the immediate target for the company is to be the largest player in the state of Maharashtra. We feel that Maharashtra is a very progressive state. A lot of development is still going on here. And there are pockets where we still see potential for the brand to penetrate and to further deepen its roots. So from the IPO, the plan is primarily to use the proceeds to further expand, set up stores. We have kept a target of 12 stores as per DRHP to be set up in Maharashtra here. And for this financial year, moving ahead next year, we'll be adding some more stores. And the journey would be to be the largest player in Maharashtra in all parameters, in all fronts. And then post that is to continue journey ahead with the neighboring states. The plan would be to keep on growing the PNG legacy and to keep on serving people better here and to keep on making the company a one happy company. Like we always say that we are a happy company with happy employees, happy customers and happy karigars.
And it's a happy you today with the IPO being decided. Also, how are you going to use the proceeds from the IPO? You told us it's going to be for the expansion of more stores within Maharashtra, outside as well. Also, there's a part of it which is going in for repaying or debt also. How much would you save up in sense of interest costs after you've done this?
As of now, we have earmarked 300 crores to be used to repay debt. Debt today is around 250 crores, and there's a term loan of around 70 crores. Primarily, after debt repayment, we use the bank facilities to avail gold metal loans, which today we are not availing, and that would ensure that the funds come back in the business again. So the entire money which is going to be raised to the IPO will find its roots back in the business. The gold metal loans will give us two advantages. One is it will help us to be hedged hedged, in terms of our inventory. And secondly, as you all know, the gold metal loans come at low interest rate, 5 to 5.5% annualized. So that will help us to save another 4% there on interest cost. So it's a win-win situation on both the sides, and that is how we have planned to use the IPO proceeds partly. We already have got bank sanctions to convert the fund-based facilities to non-fund-based facilities, and this will ensure that we are able to avail the gold metal loans in the next quarter as we move ahead.
Also, Saurabh, currently you're operating one store out of US as well. Any plans to expand internationally? If yes, then what geographies are you looking at?
We have been one of the first organized jewelry players from India to be present in US. We are there for 15 plus years. We have a flagship store in the city of Sunnyvale in the California state. And as being the first player there, we have a big advantage. And yes, definitely there's enough potential to look at other states in US. And that's something which the company right now is exploring. As far as India is concerned, after the state of Maharashtra, we'll be looking at states on the neighboring side. That's Madhya Pradesh, Bihar, UP, Chhattisgarh, Jharkhand, and finally Delhi. We feel these states are states which have a common language, Hindi, a common culture, and a very strong linkage with the state of Maharashtra. So the brand is known there, and the journey would be more easier in those neighboring states. But this will only happen once we are completely dominant in Maharashtra. And the road ahead would be to look at one state to be a dominant player there, and then to move to the next state. So it will be a journey phased out for the next 5-7 years, where the company looks at being a 100 to 120 strong store company. But the genesis would be to be a dominant player in all the states where the company is present, and to be profitable across all the stores, and to really track also the same store growth what we are doing today. So the plans are robust. We have people, processes, and systems in place. So all excited to start this new journey ahead.
Absolutely. Sort of also, when you look at the numbers and deeper into that, the expenses in the company have shot up, as we can see in the last couple of years. Also, margins have been a bit of a pain point as well. How are you looking to curb expenses and improve margins going ahead?
See, margins have been quite moderate on an increasing side as we speak. The gross margins for the company have been 13-14%. When you consider the portion of retail sale, we have a portion of old gold sale which we sell to purchase back new gold. So when you exclude that old gold sale at the store level, the margins are at 13-14% gross. We have EBITDA at around 7% and PAT at 4%. So margins are on comparison with the industry. We are looking at further increasing the share of diamonds, studded jewelry, and that would further give us additional boost in margins. And along with that, as we expand further, we'll have economies of scale. And since we're doing expansion in the state of Maharashtra, we'll not be adding too many costs on the operational side. So that will also help us to scale up the turnover and to achieve better margins. So the company is confident that in the coming years, the margins should see an improvement. And we are all catered towards that. But having said that, even today, the PAT margin at 4% is among what the industry today is looking at.
Sort of also, the big gift that the government gave this budget was, of course, cutting import duty to 6%. Have the footfalls increased because of that? And also, this is festival season. The IPO also is coming during the festival season. Have you seen a marked increase in demand because of that?
So the duty cut has been taken very, very favorably by the entire industry. As far as P&G is concerned, we have seen record sales post the duty cut, both in volume and in value. There's been a considerable jump on both volume and value side, and the market remains strong. Even as we continue heading towards Ganpati, there's a strong demand for all kind of jewelry, wedding jewelry, investment jewelry, bar coins have been strong, and I think that the year looks good for us. India as a country is really doing well. People are having faith in consumption. People are investing in gold. I think this duty cut has come at the right time, where people felt that it's a moment which should not be lost, and should be a right time to enter the market. Post duty cut also, gold has seen appreciation, and that's why it has further reinforced people's interest that gold is here and gold is bullish. So people are making purchases. I think that the second quarter is looking very good, and the third quarter, which would have Diwali as a main attraction, should again have result in good sales. So I think we are looking at good numbers for the entire year, and I think we are on track to be able to achieve what we had planned at the start of the year. India market looks strong, and especially I would say that Maharashtra has seen a very, very sharp jump from the unorganized to organized sector, and that is further fueling growth at PNG.
Oh, well, absolutely. We've seen a lot of changes coming for the jewelry sector, as you said, from unorganized to organized. The gold price is going higher and more IPOs coming into the market as well. Saurabh, thank you so much for that exclusive conversation, and congratulations yet again on that IPO listing. With that, that's all the time that we have on this show, but stay tuned. Business Lunch will take all the action ahead.